Good morning, everybody. Welcome to the Flow Show. Here we are, Tuesday, the 29th of April, near the end of month. And the business is going to start happening from today. We get some data dropping through, which we'll look at shortly. Good morning, K-Man. How's it going?
Morning, Ryan. Morning, everybody. Yeah, so business will be booming from today, as if it was quiet all the other days. But yeah, we're starting a bit of a round of data now, together with month end. Should be interesting.
Yep, definitely. Lots to get our teeth stuck into. Right, let's get stuck into the news to kick things off. Japanese Trade Chief Negotiator Akazawa says there's no change to our stance. We are demanding a full removal of US tariffs. So sounding a bit like he wants to play hardball. He says we will travel to the US between 30th of April tomorrow and the 2nd of May for talks. Kay, Japanese life insurance are apparently going to cut 9 billion of their JJB holdings. This was something that was potentially on the cards, mate. A bit of following the BOJ trimming things down, or a sign of the shifts in monetary policy and asset relocation.
Yeah, well, it's actually, is it not a little bit surprising? Because we thought that as yields are rising in Japan, they would be interested to actually up their JGB holdings, but apparently they are still thinking that it could go that those yields could go a bit higher. They must be pretty much upping their cash reserves then, because we've also seen around the turn of April, early April, that they also offloaded some foreign bonds. They have been buying back some, but not to the tenure of what they offloaded. Yeah, so they seem to be in a wait and see attitude then. Yeah, that's about what I can say about it. But
Yeah.
I mean, they $9 billion is on the face. It's of course a big amount, but in the global context of what they are holding, it's not so much of a changing of books, right?
Yeah, and it's only 4 out of the 10 odd life insurers that are looking to do this. So it's not a wholesale shift at the moment. So it could just be a few of them
The
just see.
redemptions thing as well. There's
Yeah,
a lot of redemptions coming up, so perhaps they are just waiting to for yields to go a bit higher to get back into them.
yeah, absolutely. RBA's governor or assistant governor Kent has been bemoaning the volatility in the Aussie dollar. He said that early April saw some of the most extreme movements in FX outside of the global financial crisis. Things have calmed down a bit since then, but it shows you that they're keeping an eye on these things. A bit of data this morning. Out of Spain, we get the first April flash numbers for GDP and inflation from the Eurozone. Spain GDP quarter on quarter, missing expectations of 0.7% expected, but still positive at 0.6. Year on year GDP, 2.8%. On the inflation front, the Eurozone measure HICP coming in unchanged at 2.2%. However, Spain CPI numbers coming in a bit lower than last month, although it was expected to drop to 2%. It's coming at 2.2%. But on the other side, the core number went up to 2.4 from 2%. So Spain's been one of the, call it shining light, but it's been one of the better performing countries of late. So no real surprise to see some good positive numbers from GDP there. We'll see if the rest can follow up with some good numbers as well. We've had the latest ECB inflation expectation survey. This is for March, so a month behind. 1 year CPI expectations jumped to 2.9% from 2.6%, was expected to fall back to 2.5%. Same thing for 3 year inflation expectations. That moved up to 2.5 from 2.4, was also expected to drop a point to 2.3%. So no let up from this survey data in terms of inflation. And that's also picked up today in the consumer confidence, business climate numbers as well from the Eurozone. Overall business sentiment dipping to 93.6 from 95. The all-important consumer inflation expectations, though, have jumped again at 29.6, although firms and their expectations for selling prices saw a little bit of a move down to 11 from 11.3. So again, more sentiment survey showing higher inflation expectations. This has been going on for a while now, and that can lead to inflation becoming more entrenched if consumers and firms change their habits. ECB's De Guindos, can't shut him up, can't speak at the ECB meeting, but we can't shut him up since I think it's about the third time he's been out. It says incoming data suggests modest growth in the first quarter of 2025. ECB's Ren says more cuts look correct if the outlook shows an undershoot of 2% inflation. It says euro strength is adding complexity to the price outlook, always looking at the euro, those guys. Over in Canada, Mark Carney, he won the election, although he hasn't got a majority. He's got quite a small minority over there. He's been out in the wires already, beating his chest, saying we will win the trade war and build the strongest economy in the G7. So setting his stall out for that. White House Press Secretary Leavitt says trade talks with the UK are moving in a very positive way. That's something that looks at the moment to be keeping the pound at least a tad more supportive than it has been. Treasury Secretary Besant has been out and about, says all aspects of our government are in contact with China. Again, this is something that China has yet to acknowledge. Says it's up to China to de-escalate on tariffs. Says we have a standardized trade deal template. Many countries have presented very good proposals. And he's also had a bit to say on the ECB, saying you will see the ECB cutting rates to get the euro back down. That's their ultimate aim, isn't it, Kay? Cut rates just to get the euro down. I thought this guy had a bit of sense to him.
Yeah, I mean, look, if it wouldn't be the US, it would sound, all of that would sound very desperate. But now they're trying to play hardball and blame everybody else for what's not going their way. Yeah, Besant is now a bit all over the place, right? Trying to be the hardliner, then trying to whisper in Trump's ears not to go too hard at times. Yeah, it's I don't know what to say really, but apart from the fact that we are probably nowhere closer to anything, so still a lot of words. I suppose ECB is probably not even going to respond, unless just saying that no, we are not manipulating. Japan is doing the same. Yeah, then we are like seems. It looks as if we are at like halftime in a football, or as the Americans would call it, a soccer game, right? And there's a lot of talks going on in the locker rooms, and the players are awaited to come out again onto the pitch, if we can use that kind of analogy. But there's a lot of babbling going on. Yeah, US, as we already said, they are desperate for China officially to pick up that phone. But for the time being, they are not really getting it, are they?
No, exactly. And China, they're the ones who are pushing back, saying that it's up to the US to contact them, not for China to get in contact with the US. Yeah, we've had China's Wang Yi out saying compromise and retreat will only make a tariff bully more aggressive. Then we had the Ministry of Commerce spokesman saying if the US wants a resolution, it should stop making threats, and the US should seek dialogue with China on tariffs. Now, an interesting piece that Bloomberg picked out saying that Trump's actions towards China are apparently, as they put it, unleashing a wave of nationalist support for China's Xi, so the leader there, which will be welcome news to him because despite him being the leader and showing no signs of ever giving up the job, over the last few years he has had his leadership called into question, murmurings by the population as much as they're allowed to grow. But this fighting against the US seems to be building up his stock a bit over there, Kay, which is, again, it just shows how both sides are playing to different audiences,
Yeah.
but we might be getting stuff going on under the table we don't know about.
Yeah, there's also the risk that if the problems with the US well wouldn't be resolved anytime soon, there's a risk of a lot of job losses as well. So I guess this rallying behind Xi and his team is probably also a sign that people wanting to make work of perhaps striking deals with everybody else. Yeah. Um, I think it's a bit normal because you will still have this historical cold. No, it's not a cold war, but it's like the temperature has never been really hot. And also don't forget that I mean, in the very big scheme of things, don't forget that China has not been playing ball either in a lot of deals. So yeah, running behind G is perhaps also a sign of calling him or asking him to get stuff done. Whether it be with the US or somebody else, perhaps in this case, first of all, the negotiations with the EU. We've already heard a few countries not being completely averse to trades with China, but then on the other hand, they don't want to give them the free hand either, blocking other stuff. So it's going to be very difficult, but perhaps rallying behind Xi, which they don't have too much of a choice for, right? There's nobody really against him. There's not a big opposition saying like we are going to arrange stuff. So they have to rally behind him for him to get some stuff done. So yeah, I think it's understandable as well, looking at a historic relationship between the Chinese and the US.
Yeah, absolutely. Right. Moving on to Mr. Trump himself. Apparently, we've had some more easing up, or going to get some more easing up on the tariff front, according to the Wall Street Journal. He's going to modify tariffs on foreign autos, and these changes would aim to stop tariff stacking, as it's been put. So, for example, if there's automakers who are paying automotive tariffs, they will not be charged additional duties on steel and aluminium. All part of this standardised blueprint they've got going forward, it seems, or someone's crunched the numbers and realised that they need to put some rules in place or it's going to get more messier than it is. Ukraine, according to reports, wants the minerals deal with the US to be finalised as soon as possible. And we've even had Zelensky out saying that the minerals agreement with the US after recent negotiations has become stronger and more equitable. There was a bit of a bum fight going on, and this thing has been dragging on and on. Russia's senior security official Medvedev is a bit of a policy hawk. He says that countries that have joined NATO are now potential targets for Russia, including targets of possible revenge strikes using nuclear weapons, according to TASS. So as much as Russia seems to be putting forward that they're up for peace with in the Ukraine, they're still making everyone fully aware that they're not just going to bend over or scurry back into Russia with their tail between their legs. So they like to throw these headlines out now and again just to keep everyone on their toes. Have you got anything else to talk about, Kay? Because pretty light otherwise.
Yeah, no, not really. You mentioned already the Canadian elections. Seems like Carney is going to need the new Dems to get anything over the line if they want to make any decisions. Interesting is that if that is confirmed, that Poilievre himself lost his seat, that is not really a big testimony of support after all. Yeah, and as we have been saying, just to talk about the currency now, we didn't know really what the reaction was going to be. So well, so does the
Nothing.
market. Nobody is really taking up anything specific. Yeah, you have that 50, 70, 80 pips. I mean, which is expected over an election, especially looking at the current. Trade tensions. But yeah, we're not really much further, are we now after those elections? They are not really telling us anything new for us traders, at least. What's going to happen to the currency? The next is still going to be negotiations. That's going to be his main task for the foreseeable future.
Yeah, it's pretty much no change. I thought the Canadian dollar might be a little bit weaker today because it is more political uncertainty over there, not a full government, but it seems like the market doesn't really give a stuff what's going on at the moment in terms of that. Like you say, bigger fish to fry with tariffs and whatnot. Purely looking at dollar CAD from a more wider perspective, we're turning around this 138, 60, 70 area. I'm not really making a decision either way. It is a big area. This was the near 2-year set of highs around here. So once it decides to make a decision at this level, then we're probably going to get a half decent move, be it up or down. But you want to see a good amount of this level holding. We're doing it a bit now on the downside, so that maybe keeps the downside pressure going. But we've been up and down, up and down, up and down a few times, so it's not clear cut as yet. What you want to see for the sort of confirmation move is perhaps something where we dip down, go through these lows to wherever, then come back and test it. If we come back and test it and it holds, that'll be a signal that we are then potentially going to have a bigger downside move. But the jury's still out on this one for the moment, at the very least. Right,
there's a big support zone. Because I have a slightly different look on that dollar CAD right now. It's really trying to make up its mind, but there's a very big support zone down to low 137s when you draw a few simple lines. I can have a look at it later because it's been holding quite firmly over all the attempts that we see it lower now. But the thing which I think is a little keeping it actually a bit offered is that we can't get it back above that those prior little spikes, prior lows around 129, 25, 139, 25, 45.
Yeah.
That is going to need to give way to really start rallying again. And yeah, I think it's rather a fact of the market, as you say. Like we have bigger fish to fry, and we just don't know what's going to come, right? In the Canadian dollar.
Yeah, absolutely. So we have to see what his full policies and how he's going to tackle this tariff stuff. If it's all negotiations and he's going to sit down, as he's already indicated, and deals get done, then we'll probably see a bit of relief for the Ludi coming into that. Right, yeah, let's have a quick butchers what's going on later on today. Got a bit of data coming out. Housing data, house price data. From Case Shiller and the FHFA. Thus far, there hasn't been any wobbles really in any of the housing numbers coming up. So unless there's any shocks there, we'll move on pretty quickly. The big numbers are going to be the consumer confidence numbers from the conference board, including those inflation expectations. Consumer confidence has been ebbing, should we say, over the last few months coming into this year. We haven't yet seen that appearing in anything like retail sales, but it can be a bit of a lag between, what someone says on a survey and what someone actually does in real life. But the trend is definitely looking set for the moment. So we'll see if we get another trend bucking number, or if it's going to go the same way as it has been, and we see some lower consumer confidence numbers. We are expecting a lower one, 87.7 from 92.9 previously. So the market's already leaning that way. That'll make the surprise if it's a higher number than last month. Jolt coming out as well. Another lagging indicators from March, but everyone will be looking at that one to see if there's things going on in the labour market, if vacancies and jobs being offered is being reduced, and thus why that's coming in as well. So those are your two big data points to look at later on. Can we get anything market moving from the conference ball, Kay?
Yep, I would say so. April data. We know the Fed is watching the consumer very closely. Yeah, I think it could be some kind of a mover now. Again, just reminding that we are month end, and it could be just that all data. Well, for at least today, get a bit swamped in whatever the market needs to do, but. Yeah, both consumer confidence and those jolts could be a bit movers. But well, the jolts still March data, right? So that is perhaps something that the market is going to look through. But the consumer are always data that I like to keep a very close eye on.
Yeah, absolutely. Right, let's get into some other prices. Now, a bit of a wonky one going on. So I'm going to start with Aussie dollar. As I've been saying, I've been running some buy stops, and hindsight's always a wonderful thing. But this has reiterated why I don't tend to like running orders overnight and whatnot. But I decided to leave these in. I got triggered on my buy stop through 64.40, and it failed pretty spectacularly. So far, at least, anyway. Looks like a bit of a stop run through there, as you can see in that move, and we came back down pretty quickly. And then on the bounce, we're running into resistance into the 30s again. So I'm now long, pretty much at the top, and waiting to see what happens next. Really needs to hold this 64.10, 64, or we're probably going to have a look back down to some of these levels, maybe even through the 50s down to the 30s. But we've also cracked the egg a bit. So if we do get another move up here, that might be the one that takes it through. But if it becomes resistance again, I might look, if I get a chance, might look to cut down that position or get out and then look to try again. Kay, you're in this one as well, aren't you, mate?
I moved out. I just let them go, right? I mean, it could be right or wrong, but I just don't like to be in it. I think it's gonna go, but it's just like the price action. Just let them go. It was a small one, got triggered at 42.5, sold them back out, and moving on. I've got other stuff that looks a tad more interesting right now. But you know what? The thing is now, if you do stuff like that, or if we do things like that, is to well identify your level where you're wrong. And I think if it gets back below and you close below 64 or so, that means that this whole episode is over again, I guess. But I do think, looking at time a little further out, if it holds like 63.90, 64 the figure, you could be into a good one for the end of the week. But yeah, I just decided because it didn't continue to go, and I just went out of them right now. It was small. I mean, it's not hurting anything. I can get back in if it breaks again.
Yeah,
It was
same
a
thing for
pretty,
me.
it was actually a pretty, how should I say, strange in a way, or, but kind of some move that we saw yesterday. Yeah, that move higher in the Aussie, um, came a little bit out of the blue, especially in the Aussie, which has been, let's face it, quite an underperformer for quite a while. And then all of a sudden, it went up 50 points even during our time zone.
Yeah, it could have been some end of month stuff going on there that we weren't aware of, and this could just have been a little, final blowout. I don't know. I thought that it looked like a headline move, but I couldn't find anything
No, me neither.
for it. So yeah, maybe everyone's been watching the show again and wanted to try and hit our stops. David, my stops at 63.80. Much like Kay, I'm not giving it a lot of room. Not going massive in any of these trades, and that's the thing with break trading. That's sometimes a risk. You think if you get a break when you've had so many tests, it's going to be a bit of a flyer. That's what I was looking for anyway. But in this case, it's not. So you just have to manage it. But yeah, I might get out a bit sooner than my stop if it's looking a bit dodgy under 64. Yeah, if we do get a move down to sort of these sort of levels, then I'll have to look at the trade afresh, give it some time, see how that develops. So from one mess up to another mess up, dollar yen. Been telling you all the last week or so about what would happen if we get another test and hold of this level down here into this zone 142, 140, 170. Missed this last night. Pretty much it hit 142 on the nose, and now we're in the process of bouncing from that. So this, as I pointed out, is the sort of pattern I look for if you want to see a stronger bottom than what we've had previously, where you get these lows, it breaks, lows, it breaks, lows, it breaks. We have done this before. I'm going to show you here. So around this area here, we've had support, break, and then it becomes support again into there. This is what I was looking for down here. That, and then that. And we got it, but I'm not on it. So it doesn't mean we're going all the way straight up to 150 again, but it just means that the price for now has stopped going down. Okay, just like we saw here. It doesn't mean it's the end of the trend. You can creep up, and then off it goes again. So we could get a similar type move here, but holding here should give it the legs to have a proper crack at 144. And if we're through there, we're probably going up to 145 soon after. Nothing changes this trend, though, until we start knocking out some of these fibs, the first of which is way up in the 147. So it's got a lot to do still to turn this trend around. But trading patterns wise, this was one I would have liked to have got on if I hadn't missed it, because here we are, 70 odd pips in the green. So it doesn't matter what it does after that. There's some profit to be had there. But this, as I say, potentially indicates that we've got a bit more of a stronger bottom forming. But what it does now is the question, is it that pattern, or does it go up and up and up and up and up? Kay, what are your thoughts on this one? It's, again, we can't really call much. We get data out and it could be all the way down, or good data, it could be all the way up again. But
up and down, and in the middle.
That's up and down in the middle. But it's stopped going down.
I'm a little short yen, but I'm not doing it through the dollar. I'm not small long sterling yen. I don't know about the dollar, mate. I mean, banks are calling for this and that. If their theory is correct, dollar yen should finish the month on a strong note. But if you look at if I follow my own findings with this rally that we saw in equity markets of late, all this buying dollar thing may just fizzle away, and there's not a lot to do for a month. And so I don't know. My view on the dollar is a bit clouded right here and now. My overall view, I still maintain that we are going to see lower levels, but in the dollar in general. But yeah, for the dollar yen, yeah, I kind of like your picture actually, because it's a decent hold. We could go and have at least a look back at that 144 where we stole all the time. And that would be a decent range, right? To already observe for, I would say, when month end is over. That is perhaps when we have to look at things again a bit closer.
Yeah, I agree with that. And what I would say, counter to that, though, that while it may look like we've got a bit of a stronger bottom form. If we come down from anywhere 143, so if we come down pretty quickly to this 142 area and look to edge through it, that might mean that trouble's brewing. Certainly, if we go through this zone in the next few sessions, then again, that's going to be breaking this pattern, and we might be heading at least towards these lows again. Then I'd look maybe for another support step to develop, maybe around that 141 area. Get that, then you're still maintaining 2 steps up or 1 step up off this low. So it still makes it a little less bearish looking, but it will look a bit more if we come quickly back to this level. I won't be so keen to buy it up or try buying it again on such a move unless it's a real strong confirmation. So yeah, just be wary if you miss this one as well. I know Ali, you were looking at that. Just be wary if we come back to this level pretty quickly, because that might spell trouble for that one. Mike wants to have a look at Kiwi. I know you're looking at Kiwi, so I'll give that one to you, Kay. Just one I want to have another quick look at is dollar MEX. While I'm messing around with this one, this 50-52 area is proving the sticky point still. We had these little nudges under it, couldn't hold it. We're back up. We're shifting back up a bit now. So this is the key area for me, 50-52. If we get another swift move down here through that, that might be the one that's then going to give us potentially another leg lower. But for now, dollar's looking a little bit bid in some of these pairs. So this intermediate level around this 62 is just a small little pivot level, but it's an older level. Keep an eye on 69, 70, 75. That's the close levels. And then the big one is this 85 to 90 area. That's somewhere I would look to potentially add more to my shorts if we get up to that point. Right, mate, going to pass it on to you.
Sure.
I can find a button. There we go.
Right. Just first a quick look at euro dollar, because it can't really break for the moment. Okay, so been talking about this 114 a quarter, 114 30 35. It's capped the debates again yesterday as well, similar to the downside, which is holding along this little trend line here. Yesterday we came close, bounced from it again, so that's your range here, 113 and a quarter, 114 and a quarter, 114.30. Now, bear in mind, we are at month end, so anything can happen from here. As I said, we expect that dollar buying may end up being much less because of the equity moves that we saw in the US markets of late. For the rest, yeah, I think if you look at it from like the break points have not changed, right? It's still 112 and a half, 112.70, stretch it to 112.20 perhaps, and 115 on the 115 again on the top side. I got the impression that if 115 breaks again, yeah, we had this spike and then came back, but if 115 breaks again, it won't be such a spike anymore, but we are probably gradually going up to this 117. So on the global scheme of things, still unchanged in my opinion, still bid for as long as 112 and a quarter, 112.70 hold. And if 115 breaks again, if it would break again, I think then we are probably going to knit another couple of percent on top of it. So that's really my global view. Yeah, I was just going to look at this dollar CAD. Yeah, sorry, Ryan, if it's duplication, but I've been looking at this for already quite a long time, and I've always said like anywhere in the 137s, down from 138.40 all the way down to 137s. You can even add 136.80 if you look if you take the lower trend line here. It is, to me, a very good support zone here, and we're trying, but we're not going lower. Now, on the other hand, we can't get above this 139.5, 139.40 again. Add the prior high, which is also a bit of a level here, 139.75.80. If we want to break out of the dollar cat, I think either side of that range here will need to give way. Okay, I don't know which side is gonna break out, but I would, even though it looks bearish still, because we are staying below those highs and below this fib, I would be a bit cautious and careful with this whole support zone, because it could get traded and then all of a sudden ramp higher again. So this is how my wider look is, and it joins what Ryan is saying. We can't make up our mind, and we were saying it before even the election. I mean, I don't know how any victory would have to be called, but now it's Carney. The market clearly shrugs it up, and the market doesn't know what to do with it either. So the market is really waiting for a fresh impetus to start driving the Canadian dollar again, one way or the other. And then look at the Kiwi. Well, we're still working on it. We're still working on this break here. I thought yesterday, with what was expected to happen over month end, there may be a case for it to go and have another retest and then see if we confirm the break, or at least the hold of 59 the figure, and then start to move higher again. But it's just holding above 59.80 is the intraday resistance, I would say. And I don't know exactly who was asking it, Mike. Yeah, 59.80 is your intraday, I would say. Well, 80.85. But then the big one is still around 60.30, 60.40. That needs to go to continue to push higher. And your supports are anywhere between 59.15 and 58.95 figure. That's how I look at it right now. I don't really have a position in it. What is interesting though is that we saw on better news is the recovery, and I've not been trading it. That's why my charts are not up to date. But if you look just at when risk is doing better, Aussie Kiwi tends to stand up. This is actually when the whole thing unraveled in the equity markets, and now the equity markets are doing a bit better, and Aussie Kiwi is going up. So that's an interesting one to look at. If you look at either Kiwi or Aussie, how to trade them as well. I always like to have like, oh, there's another correlation ongoing somewhere, so this explains that. It's a little bit like your Noki Stoki, right? Norwegian krona tends to do better when oils and Brent is going up, which is also somewhere a bit of a better risk picture if you want. So then the Norwegian krona tends to do better than the Swedish krona. But this one, the Noki Stoki, is undecided. I felt a little bit stupid not to have been buying the lows again, because I thought of doing it, but it's not really racing away either, the Noki Stoki. But these are all those kind of correlations that I like to watch to just judge the strength of the one or the other currency, for instance. Okay, one interesting one that we need to just have a quick look at is the Swissy. We did rally back up to this prior low here, the December 2023 low, which was broken. All those lows were broken. We did rally back up to it at the end of last week, and we have rejected it. It's a pretty strong rejection. Okay, we did stall on the 50% of the retracement, let's call it, right around 81, 85 month end as well, and we have seen pretty big month ends in the Swissy over the past year and a half even. So bear that in mind. If we see a kind of a bigger move, and I'm going to look where dollar Swiss is going to end, or euro Swiss is going to end this month, to form an idea of really what is going on in the Swiss franc, and perhaps have a fresh trade put on in either the dollar or euro Swiss, depending on risk. I think it's going to be better one or the other. And I would argue if we have better risk, perhaps Euro Swiss is going to be a bit better than dollar Swiss. If it's bad for risk, I think dollar Swiss may actually go down faster than perhaps Euro Swiss, which is still Switzerland's biggest trading partner, obviously. What else? Pop. Anyone else looking at something? No, I think we can call it a day then for today. Yeah, I'm still in that, as I said, in that sterling yen, trying to make up its mind around here, not really picking a side, but it's still looking relatively positive, I would say, for as long as we stay above 190. And then if that is the case, and if risk is continuing to do pretty well, we may have a little push up into that zone here, maybe around 194 or so before the month is over. This is what I'm looking for. I'm in the money, whatever happens, because my stop is now closer to the market. But yeah, 190 is still going to be the level here that we need to watch. If it goes back down below, it may mean that something is wrong with risk again. And cable, yep. Okay, in the medium term, broken above 133, that's your 132.90, 133, the figure, that is your support right now. For as long as that holds, I think ultimately there may be a push up to the 135s. And if euro dollar plays ball, what I think if 115 goes, this is maybe your 115 somewhere here, 135.20, 135.65, 75 in the cable, maybe your 115 in the euro dollar, then we can push up to 138, providing that we hold 132.90 figure. Short term on the day, 133.60 in the middle. That's 55.60. That's your intraday midpoint or level to watch. If we get back down there and it holds, it's probably going to continue to push through. If not, then we may have a look again at 133, the figure. And that is it. Back over to you, Ryan.
Thank you very much, mate. And Ali, asking, no, I didn't buy it at 64.40 because why would I buy it right bang on the level? I actually got my trade in 64.47 is where I decided to put my stops just to give it a little bit of room above the level. Not that it matters, it got 2.5 pips, 2 pips above the level anyway. Doesn't matter either way. But no, so I wait for the level to break. I don't buy it on the level I'm looking to trade. Right, thank you very much, everybody. We'll call that a day for today. Take care with your trading. Thanks, Kay, as always. Have a good day, everybody, and we'll catch you tomorrow. See you later.